Welcome to The Explainer. Okay, let's just think about this for a second. When you already manage $14 trillion, how do you even begin to think about growth? Well, today we're cracking open the playbook BlackRock just laid out on their earnings call to see exactly how the world's biggest asset manager plans to get even bigger. First, let's just let this number sink in. $14 trillion. That's what BlackRock has under management right now. It's a figure that's, well, it's honestly kind of hard to wrap your head around, but it's the baseline for everything we're about to talk about. And that incredible scale is what makes their recent performance so remarkable. As one analyst on their call pointed out, pulling off 12% organic growth when you're that big is, well, it's pretty impressive. It brings up the fundamental question they're trying to solve. When you're already a giant, where on earth does new growth even come from? So how are they going to do it? Well, their blueprint for the future really rests on 4 key pillars. We're going to look at where trillions in cash are about to move, the new markets that are just starting to rev their engines, their huge push into private assets, and then their moonshot goal of indexing the unindexable. All right, let's dive in. First up, what they call the Great Cash Migration. For the last couple of years, investors have parked trillions, literally trillions of dollars in cash to get those sweet high yields from money market funds. But now that the Fed is signaling interest rate cuts, that whole era of easy income is starting to fade. And that's exactly where BlackRock sees a massive opening. As those easy cash yields start to drop, they're calling this a generational opportunity for people to move that money into things like intermediate-term bonds. Basically, it's a chance to lock in today's still high rates for the next several years. And listen, this isn't just some theory they have. It is already happening. Get this. In the last quarter alone, BlackRock saw a whopping $80 billion pour into their fixed income products. And most of that, over $50 billion, went straight into their iShares bond ETFs. The great cash migration has officially begun. Okay, so that's the plan for money that's already in the system. But the second pillar is all about where new money is coming from. Because while the U.S. market is pretty mature, BlackRock is looking overseas to these emerging economies where the capital markets are just starting to catch fire. Just look at Japan. A truly historic shift is going down. Thanks to new government programs like these NISA accounts, which are kind of like tax-free investment accounts, a huge wave of personal wealth is moving out of simple savings accounts and into the capital markets, many for the very first time. And you see a really similar story playing out in India. We're talking about a foundational cultural shift. For generations, savings meant something you could hold in your hand, physical gold or cash. Now, a whole new generation of investors is looking to build their wealth in the country's booming capital markets. And this quote right here, it just nails the bigger trend. For so long, these places were just seen as sources of capital for Western markets, but that's changing. They're not just sending their capital out anymore. They're building their own robust financial powerhouses right at home, and that creates massive new opportunities. All right, pillar number 3. This is a big one. It's their major strategic push into private markets. We're talking about investments in companies and assets that you can't just go buy on a stock exchange, a world that, for the most part, has been pretty closed off to everyday investors. So how do they get in? Well, a key entry point is the insurance industry. BlackRock already manages a staggering $700 billion for insurance companies. So the play is to go to these clients and help them move just a small piece of that money, say 10%, from regular old bonds into private credit, which can offer much higher returns. And that small piece we just talked about? Yeah, it is anything but small. Shifting just 10% of those insurance assets translates into a massive $70 billion target. This one initiative alone just shows you the incredible scale of their ambition in this whole private market space. And all of this leads up to what is, honestly, their biggest, most forward-looking vision of all, to take the murky, opaque world of private markets and make it as transparent and accessible as the public stock market. What they want to do, essentially, is create the S&P 500 for a world that's never had one. To really get what they're trying to do, think of it like this. The private market right now is like this vast, uncharted territory. There are no common maps, no real roads, no universal rules of the road. BlackRock wants to be the one to build all that infrastructure, the data, the benchmarks, the shared language that finally makes it navigable for everybody. And their recent acquisition of a private market data firm called Preqin is the engine that's going to power this whole vision. The plan is pretty straightforward. Step 1, get the raw data out there. Step 2, use that data to build models that can actually measure risk and performance. Step 3, that allows you to create a standardized language for the market, which finally lets you launch real investable indexes, just like the ones we're all so familiar with. So, why should any of this matter to you? Well, because these private investments are slowly but surely starting to find their way into mainstream retirement plans, maybe even your own 401k. And if that's going to happen, we absolutely need a reliable way to understand and measure the risk involved. It's not just a nice to have, it's completely essential. And this brings us to the final thought. BlackRock is basically betting its future on this idea that the lines between public and private markets are blurring into one. From cash flowing into bonds to new investors in India to the quest to map the entire private universe, it's all part of one big story. So the real question is, as this shift happens, what does it mean for the future of how all of us invest?